Hello everyone, Hamel here, walking through my position in the Walt Disney Company, DIS. So I bought this stock back on September 23rd. So I bought it at 200 moving average. My reasoning was that it had broken through here. And typically stocks would, once they break through their 200 moving average, they will come back and find support at 50-day. In this case, it found near 50-day support. So that was the reason I bought this here. Plus, we were moving into October, November timeframe where I was looking forward for some positive news on vaccines and therapeutics, which did really happen. And we can see the boost that provided Disney. So this was one of those post-COVID recovery plays. And again, it's a large cap, good company, reputable company. So I just wanted to put some money in. At that point, I don't think they're going to pay any dividend anymore. But, again, it wasn't the reason I really invested money in that. So it doesn't really matter that much. So some good funds have ownership in that. It's always a good thing. Sponsorship has been declining. As we can see, stock has been all over the place. It is in a very, very deep consolidation pattern right now. Going on to the left side here. So relative strength is flat. We would like to see this rise. See here, EPS growth has been negative over the course of last 5 years. However, we need to look to the future, and Disney has made some adjustments in its strategy, and they are going to be focusing a lot more on Disney Plus. Very exciting future there. Earning stability is 18. Anything under 10 is pretty good. They have a very strong cash flow, as we can see. So earnings had a really bad year, or they will have a really bad year this year. That's no surprise to anyone. Next year is supposed to get better, and then hopefully go from there. So that's a little bit about Disney right there. Let's look at the estimates. So the estimates here are, the average estimate is 143.82. High side is 164. Earnings are supposed to recover next year to some degree and then continue its path upwards from there. Again, I'm not going to be holding this year over year. I may get in and out of it, but not continuously going to hold this. It's not the strategy or plan. Revenue is going to continue to climb, so this will classify as a large cap growth stock at that point once it starts climbing again. Now, let's cover one last thing. So I do hold Disney. It's a full position for me. As we speak right now, I am up 12%. I was up much higher yesterday. So I'm up 12% on this stock. So as we can see, this light blue line, that's the implied move. And that's approximate. I just calculated based on, $138. So it's 130. It's supposed to stay between these two lines, which makes sense. It can come further down here. About 130-ish. My cost basis is 123. So the chances of me turning this position into negative are very minimal. And upside gains are not that great either in the short term. So I will, but I have a cushion. So I will stick in and I will continue to hold this over earnings. Even if it hits this mark, I still probably be up about 6 to 7%. So since I have cushion, I'm going to hold this in and over earnings. So that's all I have. Have a good one. Take care.